Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. I welcome all of you to today's session of JForex Indicators Explained, in which we will be talking about the formation where we can utilize this formation to look for the reversal. The name is three outside up or down. So, as the name suggests, this is a formation where we look to think outside of the box, you can say, given the fact that in it involves one particularly large candle which is able to engulf two other candles. So, that's why the name is outside three outside up or down. And if you remember a couple of sessions back, we had also seen a three inside up or down formation. Now there is a reverse, you can say, or inverse of that formation. So let's now head to the J4X4, the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart with the candle period defined at hourly. Now, if you want to know where this formation is listed, all you have to do is go to the add indicator options, or if you don't want to take that much trouble, then the quick search option is always there. Simply type in three outside, up and down. So here we get it. All right, and you are seeing this bracket formation. This is denoting the candle formation. In this is the three outside down. In this instance, this is three outside up, this is three outside up, this is three outside down. This is included under the candle formation section. So I will let you know where it is listed just to be sure. Pattern recognition, just below three line strike, which we considered in yesterday's session, three outside up and down. All right. Now, coming to the formation uses, the concept is simple. Let's consider the immediate formation here. This three outside up is formed. It is confirmed when we have this third candle, which is on the bearish side. It is lower compared to the closing value of the prior candle, and the closing value is also lower than the opening price. Then we look at this middle candle. This is the most important candle in this formation, and it needs to be containing the whole opening and the closing price of the prior candle. So the body of the candle needs to be larger than the body of prior candle. This is very important and essential criterion. So this candle, it needs to be bearish, its closing value needs to be less than the opening price, and as I said earlier, it needs to be containing this prior closing and opening price. So it simply signifies that all the gains which happened in the prior candles are now being reversed, and then this additional confirmation factor is also coming into play with those losses which were seen in the second candle are being sustained, and also additional decline is being observed in these successive consecutive candles. So we get double confirmation. So not only the prior gains are being reversed, those decline is also being sustained. So we have two confirming factor, and that's how this formation is defined. Now the inverse of it is called three outside up, and what we saw in the bearish formation is simply reversed in this case. Here these two candles should be having the closing value which is higher than the opening price, and the closing value of the third candle needs to be higher than the closing value of the second candle. And here also the need is same, the requirement is same, that the closing and the opening price of the second candle needs to be quite large. This body of the candle should be containing the closing and the opening price of the prior candle. In this formation, the first candle needs to have closed on the lower side, its closing value needs to be less than the opening price. That means the momentum was bearish. Then that momentum reversed, and it reversed in such a manner that the gains were quite substantial, with this closing price being quite higher, not only than the opening price but also compared to the prior candle's opening price. And then those gains were sustained in the third candle. So we have the confirmation in place and also additional confirmation in the form of sustaining of the prior candle's gains. So this is a formation which is giving you quite a reliable information, sustainable formation. So that's why it usually has a quite good probability of getting the trade right. Of course, as is the case with any other formation, not always you will get the trades right, but even if we simply look at the formation and the logic of it, it is quite sound. So we get the momentum, and also we allow some more time to pass before we can make a judgment. So if I see the price again rising above this closing value of the third candle, then I think it can be utilized as the initiation point of the new trade. Or if you want to wait, maybe you can allow a couple of more hours for consolidation. And if the price doesn't really decline below the lowest point of this three candle, even that can be utilized as the initiation point, and you can place the stop loss just little below the lower point to get a buffer, sufficient buffer, and then you can try to exploit the situation to your advantage, expecting the trend to sustain at least for foreseeable future. And that was true in this case. But if we look at this formation, the decline didn't really go much further. It declined just little over 10 pips, and then those decline evaporated, and we saw the momentum shifting, and success EU candles went on to show rise, and the whole trend reversed, and we are seeing the momentum shifting. So this kind of possibility is also there, and that is why it becomes important to keep the stop loss in place and allow the possibility of the formation giving signals which are not going to be profitable. So no formation is perfect. So here, if you plan these trades accordingly with the possibility of trade not really going your way, then the losses are going to be less, and whenever you will gain, the gains are going to be solid. So that's how you should be planning your trade. Along with the logical formation, you also have to get your risk and reward ratio right, and that is going to make the trading sustainable. So we saw these two instances of this formation. Then if we go back in time, of course we are going to get multiple instances from time to time. Here also, if you were to go for a long trade, the gains would have been muted, not much of an gains, and eventually this decline also happening. In this case, if you were to short it, then this momentum continued to remain bearish for next couple of hours. But if you were to go short, the gains would have been muted, so not substantial gains. But as is the case in this multiple formations, we have seen at least for next couple of hours the momentum remains on the side of this formation. So that's a plus point, and all you have to do is get your risk and ratio right, so as to make sure that even if things simply go sideways, even if we don't really see any big move, we can be quite assured of the gains happening and accruing to us, to our account in immediate coming hours, as is the formation based on hourly time frame. Now if we change the instrument and see how it unfolds on the equity indices, Here in today's session, we saw this formation taking shape twice. Earlier, we had these three outside up, which doesn't really seem to have worked. It actually went into loss, and then we got this three outside down, and it did bring in gain if you had shorted. So we will have to observe that sometimes the gains are there, not all the times. Sometimes the losses are there. So you will have to keep this in mind. You will have to observe the formation or large enough data horizon to get a clearer picture how many times it has been successful and how many times it has been loss making, and also the expected gains when it has worked well. So you can make a statistical analysis and then you can base your strategy depending on the outcome. So that's all in terms of its logical formation. Now let's see what are the customization options available to us on the platform. We can't really change or tinker with the input criterion. The input parameter is going to remain fixed. All we can do is maybe just little bit tinker around the styling combination. If you feel like, you can go for a different color combination as well, a brighter shade. So here the formation are now looking a little bit brighter. Or if you want to change the formation, you can do that as well. Here different type of styling combination are available. It doesn't seem to be working. The transparency can also be increased if you want to make this bracket formation look less prominent on the chart. You can do that as well, but I think it looks well when it is more prominent. Okay, pick shift advanced. We calculate on new candle only. If you want to opt for recalculate on new candle, then this formation is going to take shape at the start of the new candle and it will remain constant throughout that. But that modification option is not going to make much of a change, as there is a formation which takes into consideration three candles, and once the third candle closes, we get that candle bracketed, and in subsequent candle we can use this formation. Highlight the time period zone. So here we will get the highlighting of three candles, as this formation is based on three candles only. Calculate from custom data. This option is not really applicable. If you want the indicator to be available on all the candle periods whenever you change the time frame, you have to opt in for this, or else you can specify on which particular candle period you want this formation to be available. Now that we have opted for hourly and 10 minutes, we will see this formation, the three outside up and down, appearing only on these two time frames. But for example, if I change to 15 minutes, then there is no formation here. Or for that matter, if I go for any other candle period apart from the hourly and 10 minutes, we won't be seeing any formation of the three outside up and down. So that's all from my side for today's session. If any of you have any query or any idea to share regarding this candle formation, to write to me in the feedback, and I would be more than happy to take the discussion forward. Before I sign off for the day and for the week and also for the month and the year, I would like to remind that we also have further coverage of the market developments on the Dukascopy Analytics page, so do check it out. For trying out this newly released trading platform, the link has been included in the bio, so give it a try and let me know how this formation and also the platform works out for you. try out the formation, see how it has performed over large data points, and accordingly you can make your assessment. You can determine your expectations of the profit which can be made if the trade goes right, and also the losses if the trade goes wrong, as no formation is going to bring in total certainty, and you have to factor in this uncertainty and possibility of losses and try to minimize the losses if the trade happens to go wrong. So thank you all for joining in. I'll be back in New Year in January. So have a fabulous day and the weekend and last year of the day. Happy New Year in advance. See you on the other side. Goodbye.